the week ahead. We're going to start with the big picture, or at least a few items that I see in the big picture, and then we'll work down to more specifics for next week. Last week's economic data may have challenged the Fed's plan. The data was more aggressive than they had anticipated. We don't know if there's going to be confirmation of that data or not. I think this Wednesday's beige book may well be more important than usual. Whether the larger investment managers will make any changes relative to last week's economic data may remain to be seen. Generally speaking, they don't act immediate once the data is out. They will have the meetings, they will review their data, and it may be, 3 or 4 days before any evidence of changes that they may want to make surface. So we don't know yet if there's going to be any change in that realm, but we want to be aware of the possibility of that next week. Additionally, we're within a couple of weeks of the election, so there's a high probability that we get more election volatility on a short-term basis. Now, let's take a look at more specific short-term trading for next week. The all-time high occurred last week during extended hours. While we are talking odds, not absolutes, it would be unusual for a lasting high to occur during extended hours. The market sold off a little bit yesterday after, a big rally overnight, but no downside follow through. And of course, it traded to the upside again on Friday. If you will notice the graphic in front of you, we've talked about this before, but you look at A, B, C, D, and the lines show, very exacting trend lines. The more exacting the action is off of a trend line, the greater the odds that that action is being taken by short-term laggard traders. You don't want to get in front of these laggard traders because they can extend the rally for longer than we can imagine. However, you want to be constantly alert that if the market starts to break down, you can get some very fast, heavy liquidation. The late break on Friday brought the market right down to that trend line. So as we come in next week, the question is, will that trend line hold or not? Treat the trend line the same as you would a balanced trading area. Remaining above the trend line is positive. Looking below the trend line, being rejected and coming back above the trend line is positive. The negative would be if the market trades below the trend line and starts to extend lower. I think the risk is extremely high for short-term long positions in the market. It's important not to fight trends. In other words, do not lean into the trend. You are often better off being a little late rather than a little early. Self-control is a trader's greatest strength. As we come into next week, look and keep your eye on the trend line. Thank you. Have a great week.